So, good afternoon, everyone. Myself, Omkar, on behalf of Green Advisors, I welcome you all to the virtual roadshow of Speciality Medicine Limited. So, today we will provide a brief overview of the company and its innovative business model. So, Specialty Medicine Limited is engaged in the business of marketing and distribution of finished formulation of specialty pharmaceutical products comprising of high cost oral and injectable medications used in the treatment of complex and chronic medical conditions in therapeutic areas like oncology, immunology, neurology, and rare diseases, offering a portfolio of 900 plus advanced specialty products. So, from management side, we are pleased to have Mr. Parth Goyani, Chairman and Managing Director of the company. Good afternoon and welcome, sir.
Good afternoon. Thank you.
Then we have Mr. Sumit Goyani, Whole-time Director of the company. Good afternoon and welcome, sir.
Good afternoon. Thank you.
Also, we have with us from merchant banking team of Unison Capital Private Limited, Ms. Anjali Jain. Good afternoon and welcome, ma'am.
Good afternoon, Omkar.
So, before we begin, we will play a short corporate video.
In today's evolving healthcare landscape, access to specialized and high-quality medicines plays a critical role in improving patient outcomes. Speciality Medicines Limited is part of this growing ecosystem, focused on delivering specialty pharmaceutical products to the healthcare market. Incorporated in February 2021, the company was originally established as Speciality Medicines Private Limited and later converted into a public limited company in June 2024. Driven by a commitment to healthcare accessibility, Speciality Medicines Limited operates in the pharmaceutical distribution and supply chain space, catering to the demand for specialized therapies across healthcare institutions and medical professionals. The pharmaceutical industry continues to witness rising demand for specialized treatments driven by advancements in medical science, increasing prevalence of chronic diseases, and expanding healthcare infrastructure. Within this evolving landscape, specialty medicines represent an important segment, supporting treatment areas that require targeted therapies and specialized handling. Specialty Medicines Limited works to bridge the gap between pharmaceutical manufacturers and healthcare providers, ensuring efficient availability of specialty medicines within the healthcare ecosystem. With a focus on operational efficiency and compliance-driven processes, the company aims to build reliable distribution channels and maintain strong relationships with healthcare stakeholders. Guided by its promoters, Parth Goyani and Sumit Goyani, the company continues to focus on strengthening its presence in the specialty pharmaceutical segment. As healthcare needs continue to evolve, Speciality Medicines Limited remains focused on supporting the pharmaceutical supply chain, contributing to the availability of specialized therapies and advancing access to essential medicines. Speciality Medicines Limited.
So, with that, now I would like to hand over the floor to Mr. Parth Goyani to give us a brief intro of the company and walk us through the presentation. Over to you, sir.
Thank you very much, Omkar, for running a video and giving a short introduction about the company. Uh, we will present the presentation now. So, as Omkar said, we are into trading and export of specialty care medicines, mostly comprising of oncology, immunology, neurology, and some rare diseases medicine. And these are very high cost medicines. We are doing trading in almost 20 states of India and almost 35 countries all over the world. Next. So as I told you, we do have a team size of 18, trading 900 plus products, and almost pan-India presence is there in local distribution and covering 35 plus countries into export. October's figures are like revenue was 36.72 with EBITDA of 6.51 with PAT of 6.05. ROE is around 18% and ROC is around 16 or 17%. Next. These are some financial highlights year-on-year basis. As you guys can see, we are growing year-on-year basis. Currently, also we are having much more growth in this financial year too. Next. These are some key ratios on year-on-year basis. The last one is the figure up to October 25, which is being presented in RHP. Debt to equity ratio, debt service coverage ratio are there. Next. These are again some key ratios on receivable turnover, earning per shares, and net asset value that is increasing on year-on-year basis. So these are the bifurcation of our export revenue year-on-year with some countries and percentage of this. From export, we are generating most of the revenues from Latin America and European Union, and you can see the graph on this. We are planning to allocate around 3 crore rupees from international product development, and it will be going in Sri Lanka, Tanzania, Philippines, Kenya, Kuwait, and other countries. As you can see, Brazil is the most revenue generating country for us. We do have multiple clients there. Then Armenia and Lithuania both are from European Union. Next. These are the board of directors. Me and Sumit are present currently. Pavish Kumar, Chandresh, and Archana are non-executive directors for the company. Next. So on a business perspective, we do have basically three verticals. One is local trading distribution, and other two are belongs to export. One is registered pharmaceutical dosage form with our brand name in multiple countries, and with unregistered specialty supplies where we do not need to register the product, we can supply directly. Next. These are the product overviews where most of the medicines are oncology, anti-cancers. Second, we are trading in vaccines, critical cares, anti-infective, chronic diseases, specialty and targeted diseases, and other are to wellness and hospital supportive care. On just go back, I want to share something. On registration side, we do have 7 registration in hand at present, and around 54 is under registration, and total pipeline is of 164 products. Now you can do next. These are the framework where our product is already registered versus under preparation. So mostly covering Bolivia, Jordan, Ethiopia, Uganda, Peru, Philippines, Namibia. Some are African region, some are Southeast Asian, GCC, and Latin American countries too. Next. So these are the sales currently. Mostly you can see the export sales is coming from unregistered products. As on count, we do have 7 registration which were came in first week of December itself. So sales has been generated, very few amount of sales generated in this financial year. From next one, it will be on higher side. On category wise, as I told you, chronic disease, vaccine, critical care products are our main baskets, and these categories are generating most of our revenues. Next. Next. Skip 2 slides. Yes. These are the P&L year-on-year basis, starting from FY23 of 23 crore versus 2758, and till October 25, we already secured 36.72%. Overall, our margins are ranging between 15 and 16%, 17%. Next. Again, the figures and balance sheets, the same has been reflected from P&L. Next. Skip 2 slides. Next. Skip these two. Okay. So now coming to issue highlights, we are having fresh issue of 23,50,000 shares, each having face value of 10, and maximum of 29.14 crores we are securing from the IPO, and price band will be between 117 and 124, and lot size will be 1,000. Issue opens tomorrow and close will be on 24th. And these are the data for QIB, NII, and RRI. Currently, we promoter and promoter group holding almost 60%, and 40% will be with public at present. And post IPO valuation will be around roughly 109 crores. Next. Coming to object, we are going to use 12.67 crores in setting up of R&D center. We already procured the land at Vapi. Around 3 crore will be gone to the registration part in international market. Around 1.65 crore will be goes to our marketing and promotional activities, where we do the exhibition in overseas locations. 8 crore will be working capital, and rest will be the GCPs. Next. These are our partners. Unistone team is already present. Market makers, auditors, banking partners, and all. Thank you very much for listening me.
Thank you, Pastor. It was well said. So, participants, we will move on to the Q&A session. So, I request all the participants to paste their questions in the chat box. Yes, sir. So, we have first question from Mr. Gajendra that what are your main sources of revenue and how has their contribution changed over time?
The source of revenues are trading of biosimilars and oncology products in most of the countries, and the demand for these products are going and increasing quarter on quarter, day by day. You can consider day by day, and that's why we are achieving good growth in sense of revenue as well as in PET too.
Thank you, sir. Next question, please. So we have next question from Mr. Pawan that what are your key competitive advantage and how do your number or performance support them?
Okay. So the first advantage, we do have our chosen basket, where very least competition is there. Definitely, when you will compare with generic products and general pharmaceutical goods versus the specialty care products, number of patients are less than the other, but at the same time, cost of the medicines on a higher side, as well as competition is very less. Very few manufacturers are there, and we do have very good collaborations with manufacturers making this kind of medicine, and that makes ourselves to be presented in overseas market, and that's why we are very confident that we are growing with this basket, and we'll continue adding products in it, and performance will be the same what we were achieved in past. It will be delivered in future too.
Thank you, sir. Next question, please. So we have next question from Mr. Balbir that how scalable is your business model, especially in the terms of expanding distribution and adding new products?
Okay, adding new products will be our motto always, whenever and whatever the products coming into the market as a brand or generic will be introduced once patent expires. We are always keen to add the product, and very keen to add the areas where we are still not serving. By doing so, adding the product, adding the new countries will lead us to the grow, and definitely at certain point of time we were having the straight line, or you can consider it as a saturation. to nullify this, we are also registering this kind of products in multiple market where we do have growth of almost 10 to 15 years. We can consider and draw the line for next 10 15 years with registrations, and that's why we are also having that vertical currently.
Thank you, sir. Next question, please. So we have next question from Mr. Bhaskar that what clearly sets you apart from your competitors, and how do these differences translate into better growth, margins, and market position?
Actually, I've already answered half questions answer. The first half answer is the chosen basket itself. There are certain problems people are facing by choosing this costlier medicines, so higher investment will be needed. When you preserve the stock, you need to have a pressure of liquidation of this, and if you can solve these two problems, you can definitely grab the market, and that's what we have done so far, and that's why we are growing, and margins are too good in sense of exports, where we are achieving almost on an average 20% EBITDA in export.
Thank you, sir. Next question, please. So we have next question from Mr. Pavneet that do you have any long-term contracts or recurring revenue streams that provides visibility and stability to your revenue?
Yes. So we need to have two types of contract. The first with the manufacturer, where we are securing the goods, and these contracts are long-term contracts up to 5 year, 10 year, and auto renewable. At the same time, when we are connecting with the importers of the destination countries, we are also doing the same kind of contract that they will bound to us, and that's why the countries who were giving revenues in 2023-24 are still giving and better giving revenues in current year too, and that is because the bound nature of the contract with importer and with the manufacturer both, they will supply to us and the importer will continue buying from us.
Thank you, sir. Next question, please. So we have a next question from Mr. Sandeep that how do you manage and reduce the risk related to the dependence on the third-party suppliers or the manufacturers?
Okay, so to solve this question, we are going to establish one R&D center. That is main object of our company, and almost 50% of the IPO fund is going there. The reason and the challenge we are facing currently is a challenge I can show you now. The first challenge, the molecules we need to cater to someone or make a basket. Sometimes manufacturer is not open for particular countries or the region we are targeting, or the product is not being developed by the manufacturer, even though they have capacity to manufacture, but the product is not developed. If our own R&D center can develop our desired product, we can choose any contract manufacturer who have the facility to make this product. By doing so, we will save the time, we will save the money too of the development by manufacturer, and at the same time we will be able to create the basket which is being designed by us, or which is being developed, or future perspective basket we can do. So we are minimizing third party supplier or manufacturer risk by doing this.
Thank you, sir. Next question, please. So we have next question from Mr. Sudhir that what are the key drivers behind the EBITDA margin movements across the reported periods?
The first product itself, where we are achieving almost as I told you 20% EBITDA with the export, and that will be future percentage too in sense of EBITDA margin. And drivers are the product itself. If we will choose the generic product or general pharmaceutical product, it may be a possibility we will not be able to achieve what we achieved with the specialty health products.
Thank you, sir. Next question, please. So we have next question from Mr. Deepan that what was the reason for the moderate growth in the October 25 compared to the growth rate of revenue in the FY 25?
Okay, so if you will start looking the figures from 23, 24 to till date, we do have very clear strategy to add the client, add the countries, add the product. If I had started doing this in 24, 25, this is the result we are getting at present. So this will be the continuous process and target of me, my team, and the business development team, marketing team, to add the client, to add the maximum possible products, and to solve the maximum areas we can do. And due to this target, due to this challenge, we already accepted for ourselves. The jump of growth is being seen.
Thank you, sir. Next question, please. So we have next question from Ms. Shruti that what are the main factors driving demand for your products and how sensitive is your business to regulatory or pricing changes?
Okay, so if someone is working in Africa, I can give a very best example of Africa. If I'm considering a span of only 5 years, okay, I've visited some countries in 2021 where I'll not take the name of the country currently. That country was having only 2 oncology hospital in whole country, and when I visited in past year, it were around 18. So the infrastructure in Africa is developing. At the same time, in Latin American countries too, the same is true. They were dependent on medical tourism in past years. Now they do have facilities. Once the facility will be there, there will be a huge demand of oncology products there. Likewise, biosimilars also mostly belongs to oncology, as well as some other rare diseases also having the biosimilars. If the therapy will be available, definitely the patient will start using it. So this is the first factor. We are always searching for the market where there is demand or futuristic demand for this kind of products, and we try to move ahead than the market by registering them in prior and secure the business when the facilities will be developed. Okay, in sense of sensitivity of regulatory and pricing changes, yes, it is affecting always to all, and it may affect to us. The regulatory bodies of all countries are keep changing, keep making them regulated, who are semi-regulated or non-regulated, and the countries are already considered as a regulated. They may change the regulatory to more strict, and definitely it can affect. But at the same time, we need to think about the future also, and we need to make the product which can be sustained in that strict regulatory market, and we are doing so.
Thank you, sir. Next question, please. So we have next question from Mr. Manoj that since you are primarily a trading company, how does the R&D center useful to you?
Again, I've tried to answer this question in past, but let me elaborate it again. So we are dependent on the manufacturer. We are having the desired product basket. Now, if manufacturer have or have not this product, we will be stopped. If the product is available with the manufacturer, developed already, but they are not open with our desired market. At the same time, sometimes the product is not being developed by the manufacturer. If we do have our own R&D center, we can develop that product ourselves. Now we need to find the manufacturer who have the ability to manufacture it. We can do the technology transfer to them, and we can make them run. And it will be very easier for us when we will develop the product. It will be a proprietary thing to us. We will be the owner of that development. At the same time, we will save time and cost both.
Thank you, sir. Next question, please. So we have next question from Mr. Vrutesh that do you depend on any particular product category or a segment of the most of the your revenue?
Yes, our most, as I told you over a slide, our most of the revenues are coming from chronic disease medicines and vaccines.
Thank you, sir. Next question, please. So we have next question from Mr. Kushal that are there any risk related to the product approval, licensing, and ongoing compliance requirement?
So basically, this is up to the destination country's health ministry, but whatever the documents we are giving, we are studying there. We do have our own regulatory team who is studying the documents, asking some more documents from the manufacturer if needed, regarding quality concerns or regarding the product. Once we put the dossier to destination, they may ask to the queries on some topic or ask for the extra documents to support. And once it will done, they are granting marketing authorizations to us. So I don't think so is there any risk if we fail to give the answers to ministry or give the answers of query, then definitely it may chance of rejections. But we are preparing ourselves in a better way that there should not be any rejection. Otherwise we will not put the dossier ahead.
Thank you, sir. Next question, please. So we have next question from Mr. Gogul that how exposed is your business to the pricing pressure or potential government regulation?
Currently, government is promoting generics and biosimilars and oncology products to other countries. So we do not have any problem regarding government regulations. Pricing pressure definitely comes when more generics or more manufacturer or traders product will be available in the same market. At the same time, as our aim is to add the product to new products, once some product will come to super generic, we will be already in position to add newer products. So this will also be nullify our risk of pricing pressures once molecule goes to super generic.
Thank you, sir. Next question, please. So we have next question from Mr. Jayesh that how do you ensure continuity of supply of your key suppliers?
Okay, so we do have very good planning of upcoming orders, and we need to share our order book with the manufacturers or suppliers or their authorized distributors, that type of product, particular type of product, what quantity we will consume in next month, next quarter. By doing so, they will be in better position to hold the stock for us, and we are supplying. Till the since the operation started of the company almost 5 years and 2 months now, we have not faced any challenges of continuity of supply unless and until some reasons like the what correct where the raw materials are not coming from some countries and manufacturing disrupt. But other than these reasons, we have not faced any problem because of better planning of future orders and order books.
Thank you, sir. Next question, please. So we have next question from Ms. Aruna that are there any concerns around working capital requirement or liquidity management?
I don't think so. Whatever the working capital, yes, definitely our business is working capital driven business, and we are seeks to have a good cash flow and working capital to drive the business. Currently, we are managing our business with the current funds and current working capitals. If we'll add the IPO fund and 8 crores of working capital into our flow, cash flow, definitely we will having the very good revenue too.
Okay, thank you, sir. Next question, please. So we have next question from Mr. Veer that are there any risks that could impact or challenge the company's growth plans or expansion strategy?
At present, I cannot see any risk to challenge us in way of grow plans.
Thank you, sir. Next question, please. So we have next question from Mr. Prajwal that what is your current operational scale in the terms of facility, capacity, and distribution network?
Okay. As I told you, in distribution network, we are present in 20 plus states. We do have clienteles, buyers and sellers, both in different 20 states. Most of the states are western region and northern part. In terms of facility and capacity, we do have a warehouse of almost 600 plus square feet of 15 and 25 degree, and around 10,000 liters of 2 to 8 degree. And it's a sufficient enough with the current turnover and revenue we are generating. Definitely we need to expand when more orders will be there and more space will be needed. So we will plan for it.
Thank you, sir. Next question, please. So we have next question from Mr. Ravi, that what is your current capacity utilization and how efficiently are your assets being used?
Okay. In sense of staff asset, if you're considering staff as an asset, we are almost having 80% occupation with the current staff. We will expand it after IPO. In office space capacities, as I told you in past, that when we will grow, we need to have more space for warehouse, more space for cold storage also. Then we will expand it.
Okay, thank you, sir. Next question, please. So we have next question from Ms. Vaidehi, that what are the key factors that could limit your ability to scale the business?
Okay. The first one is collaboration with manufacturers and the product available for me for some particular markets. This is the main factor limiting us to scale the business. To nullify this, we are planning to have our own manufacturing house in next 2 years. Once our R&D center will develop desired products, we will enter into manufacturing too, where we do have a hold, and it will be the best idea to scale the business further.
Okay, thank you, sir. Next question, please. So we have next question from Mr. Pawan, that how do you plan to sustain the growth beyond your current product portfolio?
Okay. There are one idea I already told. The first idea is continuous targeting to add the countries, add the client in same country we are serving, at the same time adding of the product into portfolio. The second one, we are expanding ourselves in the registration of molecules in different market. That will sustain our growth and definitely can give visibility of growing growth.
Okay, thank you, sir. Next question, please. So we have next question from Mr. Manoj. If you registered a product in the say Tanzania, how does it prevent other suppliers from selling the same product from the same manufacturer by undercutting you? Are the registration linked to you?
Okay, so first of all, our agreement says, and always we are doing the same with all the manufacturers. The product has been allotted with to us. There will be a single equation: product, specialty medicine, and the importer. Nobody can, even the manufacturer itself cannot enter in the similar market with the same molecule. I'm not telling about the brand, but even same molecules. That preserves our interest to enter in market, and that is the best we can do to save ourselves by nullifying some risk. What has been asked in the question: if someone is entering or manufacturer itself is entering with the similar kind of the product, definitely our business will hamper. So our agreement says that if product has been signed by us for particular market, as example you have told for Tanzania, if some molecule, as example, we are not doing paracetamol, but let me take the example. If paracetamol has been granted to us for Tanzania market, then the manufacturer itself will not enter with paracetamol in that market. So we are protecting our interests always by signing the agreements and very tight, strict agreements with manufacturer. At the same time, we are also telling the importers that they will not start registering or importing similar kind of the product from different manufacturers. So win-win-win, three position will be generated in this equation, and we are doing so.
Okay, thank you, sir. Well explained. Next question, please. So we have next question from Mr. Sanjay that you have reached your debt significantly, reduced your debt significantly. So what is your long-term capital structure strategy?
Just hold on. I didn't got this question. Can you elaborate, or the asker can elaborate again, please?
Yes, Mr. Sanjay, can you please elaborate your question once again? So he's asking, I think, that you have reduced your debt portion. So what is your long-term capital structure strategy? I mean, he might be saying that you will be going to debt side or equity side again for your future expansion or something like that.
Again, please. I was thinking something and missed.
Yeah. So he might be asking that you have reduced your debt portion. So for the future expansion strategy, what will be what portion you will take? As in, you will take a debt again, or you will dilute your equity once again, or something like that.
Okay. So currently we do have very little debt with the banking partners, and these are the secure debt. It will be nullify quarter on quarter basis when we will pay back them. And on long term capital structure strategies, we are not going to create the debt again with the banking partners. If we are projecting and we will achieve the growth what has been projected now, we will go ahead for some preferential or likewise.
Thank you, sir.
I hope
Next
I've
question,
answered
please.
correctly, if I
Yeah.
understood this question.
Yes. So we have next question from Mr. Amitabh that how critical is your WHO GMP partnership to your business model?
Yes, it's very critical. Basically, WHO GMP is the minimum standard we are looking after the manufacturer have. Other than WHO GMP, we are also having collaborations with higher GMP like EU GMP, and even some manufacturers having US FDA also, that can help us to register the product quickly in semi-regulated markets. At the same time, there will be a value creation when US FDA or EU GMP products are going further.
Thank you, sir. Next question, please. So we have next question from Ms. Shruti that you plan to register multiple products globally. So what is the expected timeline and cost of this registration?
Okay, so the cost and timeline varies country to country. We are segregating the market, whole market, into three parts: non-regulated, semi-regulated, and highly regulated. If I'm considering highly regulated market like Jordan, we already have, and some countries are in the pipeline. Will not take the name of it. The timeline for product registration for regulated or highly regulated countries are between 24 and 48 months, depending on the dossier we have submitted and analysis schedule. And the cost for each dossier submission roughly coming around $7,000 to $10,000 equivalent INR. In semi-regulated market, we are having expenses of around $3,000, and timeline will be between 12 and 18 months. In non-regulated market, timeline will be around 9 to 12 months, and the cost is around $1,500.
Thank you, sir. Next question, please. So we have next question from Mr. Gukesh that how confident are you in the successfully commercializing these products post registration?
Okay. So before going ahead for the registration, we do something called market research. Either we can enter with the product we have in the market we chosen, and what kind of growth will be achieved when the product will be registered in next 1 2 years. So by doing so, we will have a very good idea of product commercialization post registration. As example, the product registered and came the registration in first week of December. it's already been commercialized so far, and it will be shown in my next audited financials.
Thank you, sir. Next question, please. Sir, we have next question from Ms. Yash, that how do all these initiatives collectively translate into sustainable return on capital?
Okay. So if we forgot the local distribution and trading in export, two verticals are there. First is unregistered, where we do have fast moving cycle or turnaround time of our capital. At the same time, we are having registration, where we are minimizing the risk of loss of capitals, and we are investing in a way where our financials will not disturb so much. Whatever we are earning with the fast turnaround of unregistered business, we will start adding in the registration, where we need to wait for a year or so. That will not disturb our future business. And by doing so, we will add the product in registration. Similarly, when we'll grow in unregistered markets as well as in local distribution.
Okay, thank you, sir. Next question, please. So we have next question from Mr. Durvesh, that what are the key execution risks across your strategy and how are you mitigating them?
Okay. So the first trick I can see always is the manufacturer's turnaround time. As example, I have a registration of some products today, and I'm commercializing in next month. I need to check when manufacturer will be ready with the product. On an average, we are spending 60 days for first batch and 45 days on successive batches. There will always be a risk that the first batch will be generated in 90 days, 120 days, because manufacturer itself do not have the schedule of my product. That will be the first time. Okay. To minimize this risk, we are always concerned and connected with the importers when we will get the registration. As soon as we will get the registration before commercialization, we are intimating the manufacturers that this will be the product will be come into this month's manufacturing schedule. Plan it accordingly, and we will having the product as defined timeline, and we will manage this.
Okay, thank you, sir. Next question, please. So, next question is from Mr. Kushal, that which of these drivers do you believe will contribute the most to the growth driver over the next 3 to 5 years?
Okay. So the first driver, adding of the products, as you come to know that weight losing agent are booming in the market. We already added this into the basket. Generics are being introduced for some patent expired before 2 weeks. We already added that products. The second driver will be the developed product in our R&D center. And the third driver, when we will become the manufacturer, all will be added immediately.
Thank you, sir. Next question, please. Sir, we have next question from Mr. Veer, that how do you plan to strengthen your competitive position further?
Yes, we need to plan in a better way. Again, the same strategies. We can add some services. Also adding our key service is to cold storage management during the transit, starting from our warehouse to the destination parties warehouse. And we have managed it in a way that out of 100, 99.5 shipments, almost one shipment in 200 are missing the temperature. Otherwise, all the shipments are to be in desired temperature line, either in 1525 or in 228 degree. Okay. The second strength we already developed and developing is to add the countries, and to add the countries which are called the regulated market, as we are much targeted into European Unions. We will further add more countries of European Union where many people, many competitors fear to enter.
Thank you, sir. Next question, please. So we have next question from Mr. Yash that how will IPO proceeds support your operational efficiency?
Okay. The first thing, as I told you, we are working capital driven business. Adding of 8 crores of working capital immediately will definitely helping us to complete our order book efficiently. At the same time, we will be able to cater more clients and can make our order book bigger than the past. And R&D center, I've already told you multiple time use of and help of R&D centers. And when we'll use to expand ourselves in the registration with the use of IPO funding, we can make our pipeline bigger. At the same time, we can push ourselves to submit the dossiers as fast as we can.
Thank you, sir. Next question, please.
Yeah.
Yes. So we have next question from Mr. Manoj that are you selling registering medicines under your own brand or you are using the manufacturer brand? Example, say your own brand is XYZ paracetamol or Crocin.
Okay, so basically we are using our own brand. We are choosing the brand name. We are going for IPR, and once we'll get the IPR or under process brand name, we are using for the registration. In general scenario, we are not using manufacturer's brand name because we know we need to create our brand as well as valuation too by using our brands. And the brand value will automatically be in us if we'll use our own brand. Otherwise, the value will goes to the manufacturers when we will use manufacturer brand.
Next question, please. Okay. So we have next question from Mr. Durvesh. That, what key regulatory risk does the business face given the nature of the pharmaceutical industry?
Yes. As you all guys knows, pharmaceutical industry is a very regulated industry, and always there will be a regulatory risk when some countries are changing their regulatory body, their regulatory guideline. But more or less, we need to accept that challenges, and we need to make the medicines to be ready for future regulatory updates. As example, all the countries now which were called the non-regulated market are shifting into semi-regulated, and the market which are already stated as a semi-regulated is being shifted to the regulated by stricting their regulatory rules, nothing else. But we are preparing ourselves that on a stricted base analysis of our dossier or quality concerns, quality analysis, pharmacovigilance analysis, we will be able to sustain in the market.
Okay, thank you, sir. So we have next question from Mr. Manoj that margins for registered versus unregistered products and what will be their mix being going ahead?
Okay. So with unregistered product, we are having almost 20-22%, depending on the countries. With the registration, we are expecting and securing currently around 35-40% margin in all registered products. By going ahead and adding my local revenue where the margin are much lower than the export one, we will be able to sustain our margins of 15, 16, 70% on year-over-year.
Thank you, sir. Next question, please.
Thank you very
Thank
much,
you,
Rishi,
Mr.
for
Rishi.
your wishes.
I think we have covered the majority of the questions. So before we end the session, I would like to have any closing statement from you,
Miss Anjali will give.
sir. Okay.
So thank you very much for asking the questions and listening to me. That's all.
So yeah, thank you, participants, for joining us. Thank you, Pastor. Thank you, Anjali, ma'am. Thank you, and have a great day.
Thank you
All the
so
best for
much,
you.
everyone.
To you too. Thank you.